Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, today we again will take a look at the euro currency. The situation on the euro currency right now is very sophisticated, and as you will see from our daily update, there are a lot of chances or a lot of different patterns could be formed in the nearest future on the euro currency, and that's why we have to structurize our view on this market and to create some plan for action during the nearest time, because as we will see on the intraday charts, on the daily time frame chart, the different patterns of the different durability could appear here. This could be the daily pattern, intraday charts, and so on. And we will start from this consolidation that we have discussed yesterday, in particular speaking with this high wave pattern that we not occasionally have mentioned yesterday, because the high wave patterns, when it appears on the market, carries very significant meaning, because as I said, although this pattern does not show the direction, but the high of this pattern and the low of this pattern have very special meaning. Depending on in what direction the breakout will take place, we could count on the further development in this direction of the market. So this is some indication of the equilibrium. And yesterday we said that that is our first indicator, the gap and this top of this high wave pattern. If market will be able to pass through it, that will be the challenge, that will be the confirmation that probably market is ready for further upward action. But you can see that market wasn't able even to get us the initial confirmation by passing through this top of this high wave pattern. It wasn't able to break this top out to the upside. So that's why right at the beginning of this motion above this consolidation onto the upside, market has failed and turned to the downside. Simultaneously, with inability of passing through this high market, it means that market has shown some failure breakout of this consolidation. It means that market should proceed lower to the opposite border. It always happens when the market fails to break the consolidation to the upside. Its nearest target will stand at the opposite border of this consolidation. And with this failure, with market returning right below the monthly pivot point, today, by the way, guys, the last day of the April, when the market now is moving below the weekly pivot point, the chances on the immediate upward continuation becomes very weak. The first point of our trading plan suggests the watching for these lows. You will see it on the 4-hour time frame chart, because as the lows will hold, there are two different patterns could appear. First pattern, that could be the butterfly sell with this left wing of the butterfly, okay? And here we could get the right wing of the butterfly with the opposite potential, okay? If market will hold above these lows. Until market will stand here, the chances of this butterfly still holds. That is possible. Also, guys, despite the fact that market wasn't able to pass through this consolidation, pass through this gap and move into the upside, the chances of this butterfly still exist. I am speaking about this daily big butterfly, okay? That is still possible. One moment that this could happen is market could a bit postpone the starting of this butterfly on the lower period on the euro currency, because the validation point of this pattern stands right here, and it's too far from the current market to these lows. And even if market will show this retracement down, A, B, C top, D retracement, that will not lead to the failure of this butterfly. It just will postpone it and move the starting point to potential starting point to the 618 support of this most recent thrust. We will take a look at the 4-hour time frame chart. You'll see it clearer. But I just need you to show the real sophisticated situation, because what we could get first butterfly here if market will hold above these lows. We could get ABCD down to the 618 support of this thrust, and just shifting the thrust, the starting point of this big butterfly lower, but even this ABCD down will not erase the possibility for this butterfly to the upside. Okay, we could get this big ABC top D pattern as we initially have suggested based on the weekly butterfly and based on the weekly bearish stop grabber. So a lot of chances here, and the first stage of our plan suggests keep an eye on this consolidation. Depending on what will happen with these lows will lead us to shift further to the larger patterns. I mean butterfly or greater ABCD down. That will be the second stage of our plan, and it will be mostly medium term, not the short term. Now let's shift to the 4-hour time frame chart. On the 4-hour time frame chart, here's the pattern that you see and that we have discussed. The inability of the market passing through these highs, reverse to the downside, and break out of the lows of the high wave pattern on the daily time frame chart makes chances on further downward continuation a bit greater than reversal to the upside right from here. They are mostly bearish in the short-term perspective. That's why I think that chances on reaching this area is greater than turning to the upside right here and showing this butterfly. But at the same time, I do not want to take short position here, and here is why. If even we will become right and market really will reach this area, it's not very attractive position to take into shorts. And the point is not with the possible butterfly. The point is with your stop. Where you will place your stop if you would like to take the short position right here. Probably somewhere in this area. But the distance right to the agreement area with the 618 support and the ABCD target stands even closer. The risk-reward ratio will be unattractive. That's why in the very short-term perspective, in the period of 1 or 2 trading sessions, I would better watch for this area for taking the scalp long trade, because that will be an agreement. That will be the support, the 618 support and target of the ABCD. The chances of even minor retracement right back up for the 3-8 resistance of the whole move down, as usually happens with this ABCD pattern, looks significant. And that is first opportunity for taking the scalp trade on the euro currency. 137.60 area is an area where we should watch for a buy opportunity for the scalp long position. That could give us the 50, maybe 60 pips of the bounce. What will happen later is difficult to say. Who knows, maybe this area will be an area where a daily butterfly will start to work. Market just will show Gartley's 222 buy. That is also possible. So guys, that could be this one pattern. 222 Gartley's buy pattern. Okay. 618 supports is also very suitable area for starting the butterfly. So that could be left wing. Okay. That could be starting point of the right wing. Market could start to the upside. That's why this area is very significant. Because if we will become wrong and market will later continue move down, this bounce up will let us to move our stop to the break even. But if we will become right, we could get the position with the big daily pattern that has the tremendous upward potential. And the key to this trade is this area. So that's area is in fact the cornerstone of the possible resolving of the riddle on the euro currency. That's why this level is our primary level and the short-term perspective to watch for. If market will not reach this area, will hold above these lows and start move to the upside, that will probably tell us that we could get this butterfly. But this will be another tune. Right now, I think that the chances is not very big to see this, mostly due to the yesterday's behavior with this high wave and how market behaves right now. So market has failed to pass through this area, returns right back down. Even more to say, if you will take a look at the A, B, C top pattern, market already has hit the 618 target right here. So if it will start move to the downside, the next target will be already here, and this will be very difficult to hold market to stay in this area between the targets. It's in fact where market will have no significant support area. And this move really right now is really fast. So in fact, market has erased all this frosting candle up by this move down. And so I don't want to say that I'm sure for the 100%, but currently I feel that the chances on downward continuation and reaching of the 137.60 a bit greater than on the possibility to see this butterfly here. And taking into consideration the special meaning of this area for daily pattern, for this butterfly, big butterfly, I think that we should be focused mostly on this area. Besides, as I said, taking the short position here is an attractive from the risk-reward situation. Taking long right now, well, it will be mostly the gambling rather than the common sense trading, because here you do not have any patterns. One reason to take the long position that you have right now is just that market stands very close to the invalidation point. This will be very minimal, in fact minimal loss, and the possible appearing of the butterfly is just mostly the gambling, just to make the stake on the possibility some occasion that market really will turn to the upside. Well, that could happen, but the common sense tells us that we mostly should be focused on this area, because that will be the key, and this will be really significant support that will let us to protect our position with the break-even stops at the first bounce out of it. That just will be a significant advantage that will let us to exit from the wrong position without any loss probably, or even with a small profit. Well, of course, non-farm payrolls could shift the overall situation on the euro currency drastically, but right now the technical picture looks as we have just discussed. So let's see what will happen, and let's be focused on this 137.60 area.